Hello everyone, welcome back to Crypto Cash. Thank you very much for joining me here. Happy Monday to you. Hope you're having a fantastic day. Thanks again for taking the time to watch. Now what we're going to do is obviously take a look at Bitcoin once more, see what's going to happen here next. It's kind of doing what we expected it to do, creating lower lows and lower highs still. And at this point, we can expect, generally speaking, the overall census is here to come down, right? We're going to kind of expect that. That's the thing with trading. You want to expect the worst and hope for the best, but try not to be too optimistic, because the charts are telling us that it still wants to continue lower, and if so, we're going to be ready for it because we've prepared for it, right? So that's the concept there. Anyways, if you're new to the channel, just know I've been teaching and trading for over 17 years. I love it. It's just one of my favorite things to do, not just staring at the charts all day or consistently throughout the day, but also helping people get where they need to go. So we've got an amazing community, in case you weren't already familiar with that, cryptocash.tech, where you can go ahead and see basically a lot of awesome members here doing very, very good things. So, the great thing about the community is the fact that we all work and learn and grow together. I'm adding a lot of new features here as well. I'm working with High Block Capital right now to kind of get some detailed features here on the website here, so we can kind of help, not just the website, but my members and future members kind of get where they need to go a little better with, potentially some liquidity options and a handful of different features. Okay, so we're going to kind of look into that as well, but generally speaking, there's a lot of good stuff here. The main concept though is that we're all, kind of learning and growing together, and we're benefiting from different opportunities here, right? So even though this is an older signal, we still took 73% profit on Ethereum here recently, hitting 3 targets in 27 days. So to me, that extra little padding in the account is just fine, right? So again, a lot of cool little features, of course, that come with it. You have options for signals. There is a trial period there. There's also, of course, some affiliations that I have as well. With Bybit, for example, they're directly connected to my Cornix, where I essentially send out signals through Cornix, and Bybit picks up on those trades and does it automatically. Be sure to check that out. It's a really cool feature. We also are partnered here as well with BitGet. They've been my longest partnership. They've been fantastic to our community, offering some really nice benefits. And same thing here with MEXC Global. I like to mention this because they offer leverage in the United States without any VPN requirement. Obviously, if you want a VPN, I got you covered there as well with 3 extra months free. Because again, most exchanges are requiring VPNs, and I'm sure MEXC will eventually require that too, but for the moment it's really nice to have that as a feature without worrying about those moving parts. So talking about Bitcoin here, what we want to do is look at a few things, right? It's Monday. We want to take a quick peek at the charts, kind of see what's going on, kind of go from there, because again, traditional markets are up, which is interesting to see Bitcoin go down, right? Well, that does happen sometimes. It's not an exact science where the traditional markets will increase and Bitcoin will decrease, but for the most part, we can expect them usually to work concurrently. Okay, so we can kind of see here that we didn't get that bounce off of the support here for traditional markets, where I was expecting the price to come down a little further before it comes up. Whereas with Bitcoin, we're coming down to get closer to the support level here. So we might actually see that potential bounce actually at that level, about 21,250 as a rough estimate. So again, regular markets are up, Bitcoin's down. What does that mean for us? Well, it's nothing to really worry too much about. The interesting thing about this, and this is always a unique phenomenon, but Bitcoin dominance going up and the price of Bitcoin going down, that tells us a lot that traditional markets, while they are doing well, are not affecting us as much as usual. In other words, with Bitcoin dominance being up, we can see actually all the altcoins getting hit pretty hard here. Okay, so it's that knee-jerk reaction, it's that fear that Bitcoin's going to drop its tentative bottom and go much further down. Okay, now again, we've talked about this previously, that we are bearish on the short term. Again, we've looked at the larger time frames. We're underneath specific indicators on the weekly and the monthly, right? And we're stuck in this range of 21,000 to 25,000. Okay, so with us coming down to 21.5, I can see why people are concerned, and that's why alts are getting hit fairly hard. Interesting enough, Bitcoin dominance is up and the price is down. It does happen sometimes. There's nothing to be concerned with. It just means that a lot of the volume is coming away from altcoins and it's going into stable coins, and essentially waiting for the price action to hit its bottom before people reinvest. And that being said, we can see that on liquidity, of course, but generally speaking, we got a lot of volume here and here with a previous resistance level working likely as a new support. So my speculation here is that we should see one of two potential scenarios: the price come down to 21,200 and bounce, or the other potential coming down roughly to about 20,000 to fill that CME gap from a couple weeks ago, to effectively fill that void and the price continue to higher from there. The probability of becoming much lower than that is fairly low in my personal opinion, just based on the amount of volume we have in this range. So generally speaking, I think it's pretty safe to presume the price is going to continue lower. but we don't truly know, right? So be careful buying the dip, so to speak. The dip may not be in, if that makes sense. But on the same accord, depending on your overall situation, portfolio, etc., it wouldn't hurt to add to your position a little bit as you're coming down. We have a long position, as a matter of fact, right now with multiple entries down all the way as low as 20,500. While the probability of it coming down to that level is lower, it's still possible. So why put all your eggs in one basket? Why not average your price down? That's essentially what we're doing. Again, different strokes for different folks. A lot of people will go hard on leverage to the downside because it does seem likely that the price is going to continue to lower. All right, so let's look at reasons why it may not continue tremendously lower. First of all, 50-day simple moving average is working its way up here, right? That is a nice support level in most cases. Okay, so again, it's kind of averaging itself out upwards here. So as the price comes down, it should bounce at some point or create some kind of support level at that area. Okay, that's the reason why this golden cross is beneficial. It tells us we're above both moving averages. If we lose the 50, we've got the 200 to fall back on, right? The 200 coincidentally is averaging itself out at 19,800. CME gap potentially getting filled right there at that level. So that's another reason why I felt comfortable taking multiple entries on a long position to the downside for Bitcoin specifically, and I'm leaving alts alone for the moment. While I did, recommend shorting throughout the weekend for the altcoins, and it looks like that was the right call, sometimes waiting is the best option too. Okay, so again, right now, for the most part, we got these two nice support levels at 19.8 CME gap as well as 20,500. That's literally right where the CME gap is. Okay, so that being said, the daily looks like it's going to continue lower based on that sentiment, but it shouldn't continue tremendously lower. We are under 50 in the RSI. Same thing with the money flow index as well, right there in that same range. And we can see, of course, here, we're starting to cap out a little bit here while we still have this decent amount of divergence. We can see the price action continuing lower. There's potential it might start to dissipate and average itself out sideways from here. Okay, so again, I do think the immediate bottom is right around 21,200 to 21,500, right in that range. But if we do lose that once again, 20,500 is a pretty safe estimate for the secondary support level. Taking a look here at the 4 hour, we can see the moving averages were down below all three. That's never a great sign. We can also see we are establishing lower highs. Obviously, that's an easy one. But once again, as I've mentioned previously, when you have a bearish type of scenario like we're in right now, the only way to flip that, so to speak, or to understand that you are tentatively bullish is to establish higher lows. Okay? Does this look like a higher low to you? Not yet. No, definitely not. That's actually, as a matter of fact, a lower low. Sorry to regret to inform you, we are making lower lows in the 4 hour. To me, lower lows in the 4 hours is a pretty important indication that we're still having trouble breaking through that resistance level and the price should continue further down. The thing that we do need to recognize, we're getting a little on the overextended side here. So we do take a look at TD sequential, we're kind of down to like, what, a 6 right now? We should have another, 3 to 4 more 4 hour candlesticks, somewhere in the range of 12 to 16 hours of continuation to the downside before we see any type of relief. And again, I say should because once again, you hit a 9 doesn't necessarily mean it's going to stop. It just means it should slow down and average itself out sideways before it makes another move. Okay, so hypothetically, the price averages itself out here and either goes up or goes down. Okay, one of two things will happen. I can guarantee the price will either go up or it'll go down. Right? That's an easy guarantee because that's just the way the market is. But if we see here, we got a Bitcoin essential divergence here on the Bitcoin chart. So for lack of better terms, we have the 12-day intersecting with the 26 in a downward fashion. That effectively tells us we have that potential for further downside coming on the horizon. Okay, so again, that could very well indicate the lower lows and just kind of work concurrently with that. So what we've seen here so far is, minus the fact that we're close to 30 on the RSI, have a potential support there forming at this 21,250 range. It's pretty obvious the price is going to continue lower in the near future. Okay, and when I say lower, it could absolutely try to come up here and establish a lower high and go lower. It may not just drop like a rock, but for the most part, somewhere in the near future, we should see this level test. It's kind of what it's telling us here. Again, pretty much for the most part, 4 hour time frame is telling us we have further divergence likely. That being said, taking a look at the 1 hour, we can probably see that reaffirmed on the cloud. We're stuck below the cloud. Even though we're fairly range bound at this point, we're still definitively below the cloud, establishing lower lows. So the conversion line being below the baseline, lagging span being free and clear, upper and lower lead above the price action, all three signs here to leave your short position open, which is why I feel comfortable not closing our Ethereum position we have from a few weeks ago, because the fact that it's still open and still viable to come back down and hit all of its targets. While it's still a little bit aggressive, I don't think we're going to hit all targets. It's still important to leave it open because we got a small percentage available. Right now, again, how you should be doing it if you have multiple profit targets, which I recommend doing, of course, don't just sell everything at once, is to essentially, use a scenario like this. We can confirm we're bearish in the short term. When you set your trade targets, you set 3 or 4 targets. We have about 5 on most cases, based on the bear market strategy we're applying. And you use those strategies and those targets to essentially be able to maximize your benefit. But what you do is in the very first target or 2, you take somewhere in the range of 65 to 80% total out of the market. So that way, if you let the rest ride and it comes back to break even, your trailing stop loss would effectively close you out at break even, and you're still ahead by a decent percentage. Okay. So again, there's ways to survive the market, and if you use good strategy, it doesn't matter how consistent you are as a trader, you'll commonly average yourself out upwards. Those are things I teach in my trading academy, as well as the fact that my community, we're all kind of have the similar mindset here. We're not super crazy aggressive, and I think that's important to do that because, in all reality, yes, you can get rich in this market, but you can make this a full-time job, not even a full-time job. I mean, literally, it's very, very part-time, and be full-time wages, for lack of better terms, if you use good strategy and just slowly build your account and not get too crazy aggro. That's what gets you wrecked, and unfortunately it happens a lot. I get a lot of members coming over saying, hey man, I'm in a bad situation, how can I help? Or what can you do to help me? And I love to be able to get people on the right track, and that's really cool. So anyways, check that out in your own time, cryptocash.tech. I can't see much else, honestly, that's really indicative of potential upside. We need to establish higher lows first. So once we start getting higher lows, then we might have a better conversation. I know you have higher lows in the hourly, but if we don't have higher lows in the 4-hour, I don't really see this coming back in the immediate future, okay? We could see some random stuff happen, of course, fundamentals do factor in, but for the most part, this is all standard technical analysis telling us lower lows are probable until it discontinues, okay? So that's where we're at. What are your thoughts? If you have some, go ahead and comment below. I'd love to hear it. If not, that's okay too, and thanks for watching. I appreciate you. And also to my community members and everyone else that's been supporting me for the last couple of years through my channel here. Greatly appreciate that. Love working with you. And thanks for the wonderful feedback too. I get some comments here recently that are like, hey, we actually got a normal guy on the YouTube for a change. And it's cool to hear that kind of stuff, because unfortunately, and I don't watch hardly anything at all, but from what I understand, there's a lot of hype out there, and be careful on who you watch, including myself. If you don't feel comfortable with it, that's fine. I don't mind. I just, again, everyone has different strategies. And if you're more aggressive, perhaps look elsewhere. But if you want more conservative and realistic approaches, maybe continue watching or consider becoming a community member. We've got a lot of growth on the horizon with some amazing, amazing features with the new website and the new platform. Once again, trying to get something working out with High Block Capital and get some awesome features added to the channel. Thanks again for joining me here. Hope you have a great rest of your day. I'll see you in the next one.